Hi guys, Alex here. Thank you for tuning in. Today I'm going to be guiding you through the branded residences segment in the UAE because I see time and time again people making investments based on hype, based on advertising, rather than solid financial analysis, sometimes logic. And that's not to say one investment is good, the other is bad. It's all relative, I get that. But I wanted to create this video to give you my perspective on the market, having been here for the last several years and having worked with a number of people across segments, so that I can pass on this knowledge to you so you can become more intelligent investors. By the end of the video, you'll have a much clearer understanding for where you should focus your attention in terms of investments for branded residences, because not every brand is created equal, and you'll be able to make smarter investment decisions. So I noticed recently that a lot of developers are going into brand collaborations. When we speak about branded residences, sometimes a brand is not a brand. And of course, we know that something like Ritz-Carlton is very different than something like Brabus. And for some people, they might sound the same. And that's why we're talking today, to help you differentiate between them. I'm going to start off with different tiers, and I have specific examples and case studies from existing transactions so that you can see for yourself what the data shows. That's not to say the data is perfect. There will always be exceptions, and that's something that we discuss when we work together, but at least you'll understand the vector and you'll understand the questions you need to ask when making these types of investments, and just investments in general. So at the highest level, we're going to have hotel brands, to be frank. It's generally brands like Bulgari, like Royal Atlantis, like Six Senses, Dorchester, Aman, Rosewood, Jumeirah to an extent, Mandarin, Four Seasons. And this is going to be, I would say, the highest tier. Why? Because think of it this way. These are brands that are in the hospitality business. They know how to create and design spaces to have maximum impact on a person's quality of stay or quality of life. And the services that they provide, being able to think ahead, being able to plan ahead for a customer's demands or needs before they even think of them, is legendary and known around the world. So it makes sense that when these types of brands go into architecture, they go into residences, that's going to translate. And that is actually what drives investors around the world. Think of high net worth individuals moving to Dubai, and they have a choice of buying from a well-known brand like Ritz-Carlton or Jumeirah or Six Senses versus something that's not branded. In their mind, they already understand the brand standard and the quality. So generally, if they can afford it, they're going to choose the former. So what kind of returns, what kind of prices? Generally, these are projects where 2 bedrooms start at about 15 to 25 million dirham. So between 4 and 6 million US is the starting point for 2 bedrooms in these types of projects. The returns can be double, triple your money. Let's look at an example we have Bulgari here, where it was originally bought for 6.5 million in 2019 and recently resold for almost 20 million in 2025. We can also look at Royal Atlantis. Tried to stick to 2 to 3 bedrooms. Penthouses have a slightly different curve, but also effective investments. So someone bought this in 2019 for 21 million and resold last year, almost a year ago in May 25 for 65 million. So it's a more than 3x return in a span of 6 years. And these types of returns you can really only get in this segment in the market. You can also get this in commercial real estate, specifically when buying high-end properties like Lumena from Omniat, then buying land and reselling land. It's also these types of returns are possible. But generally, this is going to be the cream of the crop. And that's why I'm always a huge fan of these types of investments. Like I have investors in the Mandarin and Saadiyat in Abu Dhabi. I think it's a fantastic investment, given the limited number of branded projects in Abu Dhabi. But let's move on to the next segment. The next one down the list is, I would say, slightly maybe lower, less luxury brands. And here we're going to have brands the likes of Fairmont, like Sofitel, St. Regis, like Nikki Beach, I would say Marriott, Address, and Eden House, even though Eden House is not technically a global brand per se, but still I think it's up there, and it is fairly high quality. What kind of returns we can expect? Well, they're going to be less than 3x generally. I have an example here from Eden House on the canal where it appreciated by 2 million dirham, so it's about, 25% in a year and a half, which is, I would say, fairly good appreciation. So you can see it's maybe a little bit lower than the prior tier, but still respectable. If we actually move down the list, before we go to the next tier, I would say there is kind of a side where you have collaborations with architecture brands like Foster and Partners, like Zaha Hadid Architects. These also make for high quality collaboration because they make unique buildings. And uniqueness and exclusivity is what's actually relevant for us when we're thinking of reselling this, when we're thinking of these assets as investments. Then we also have what I would call black label projects. Just like in fashion, you have, like Ralph Lauren, and then they have their black label, purple label lines. And so similarly, these might not be branded per se, but these are still, I would say, very interesting investments from developers that don't have necessarily a brand collaboration. And here I would list the likes of Salaya from Miras, something like the new Sadiat project from Aldar, that's in one of the best spots on the island, something like Como Residences from Nahil on the Palm. As in any case, you always have to look at location, we have to look at the unit and the specific dynamics of that area and what is going to be and what isn't going to be blocking the view. That's always going to play a huge impact on resale. But nonetheless, I would place them in the upper high tier as well. So let's move down, and this is where we start getting into branded projects that I think demand caution from investors, to put it that way. And here we're going to have the likes of Mercedes and Bulgari and Jacob & Co., Frank Mueller, Bentley. You can already start to get a sense that where is architecture and where is a car brand. So here we have kind of combining things that are not necessarily similar to generate interest. Because in most people's minds, they think Bugatti or they think Mercedes, and they associate that with a certain price tag, a certain exclusivity. But the question of how well that translates to a residence is very much an open one. And I would say, thinking of it from a risk standpoint, this starts to present a risk. Because just because Mercedes makes a quality car doesn't mean that that will translate to a quality building. It may, but nonetheless, the risk remains. I have here, I pulled up Mercedes, for instance, a two-bed, that in a span of a year and a half, it grew by a couple percent, like 2-3%. Yes, the building is still in construction. Yes, it might grow later, but you can already see the growth trajectory is a little bit different than some of the other projects that we've discussed. And I'm looking forward to see how Bengadi pull this off, what they're going to do with these buildings. But in my mind, brands like jewelry brands, like watch brands, like car brands, don't necessarily translate well to architecture, or at least it's not an immediate match. Yeah. And I want to talk about the next tier, where we're starting to see the emergence of, for instance, sports club residences, like Chelsea residences, like different football clubs. We start, for instance, seeing also Brabus, which also interesting from a brand standpoint, but questionable how that translates to actually a quality building and quality service. Here we also have some lesser brands like, I think, Missoni, Cavalli, etc., which are not necessarily the highest end brands. And just as an example, I looked into Cavalli, for instance, estates in Damac Hills. And so in a span of, 2 years, it grew by less than 10%, or about 10%. So that's less than a 5% annual increase in pricing. And normally, people think branded equals amazing. It equals outsized returns. And I wanted to create this video really to drill down into this so that people stop thinking that way. Because if you can't compare Amen or Cheval Blanc, or you can't compare Four Seasons to something like Cavalli or Chelsea, or something that's not necessarily easily translatable to residences and architecture. It's not to say that either one is good or bad, it's just all relative, and I tend to favor outsized returns with the lowest level of risk, and that's the way that I work with my clients to create bespoke portfolios that allow us to do exactly that. And if we just take a step back, we start to see that more developers realize the hype and the interest that slapping a brand on a project can generate. But at the end of the day, that's not in and of itself sufficient to make it for a quality project, unless you have something like the global brands that I mentioned from 5-star hotels, which, well, by definition, they're going to pick fantastic locations. So that part is less relevant. But who is the developer that's pulling these off? Is it H&H, Omniat, who's working with Dorchester, or is it the likes of Damac or Bulgari or Azizi or Danube? We always have to take that into account, and we have to look into what's the history, what's the track record of that developer? Have they built any project like this before? If they have a completed building, what's the level of quality of that building? Have investors in their existing projects successfully exited? Some developers like to throw around, oh look, we sold X billion of dirhams or dollars in our first day. Okay, great. That doesn't mean it's a good project. It doesn't mean it's a good investment. A good investment is where investors went in and exited with a certain amount of profit. And I would say also successful projects are ones where people have moved in and have enjoyed a high quality of life with minimal repairs, minimal amount of time spent dealing with the management company, and that also translates to a positive user experience and improves the brand of that particular developer. So all this to say is, when you see an advertisement for a real estate project, or you're walking around here in the malls, there's always people coming up to you trying to sell something. Many brokers in the market work this way, where they see a brand or they see a new project and they try to sell it. Generally, they come from a sales background, and it's important to, yes, that's one piece of the puzzle, but also take a step back and think about it logically. Is this brand actually needed in the world? Is it actually in demand? What's been your experience with this particular brand? And more importantly, what's the experience of our target market for whom we're exiting it to with this brand? A lot more people know about Ritz-Carlton than they know about Cavalli. A lot more people know about Four Seasons or Mandarin than they know about Chelsea, I would argue. And this is hopefully giving you some additional lines of questioning to bring into your investment analysis. Because in addition to all this, we also have to look at the floor plans. We have to look at the strategic direction of that particular area in the Emirate and in the broader UAE, how it fits into the strategy, and whether it actually makes sense for investment. I think in any of these categories, we can find what you would call good investments, but good is relative. So if anything, I hope this video helps you think deeper about your investments, helps you start to be more discerning about brands, and also hopefully it clarifies maybe questions or concerns you might have had about the region. Just because there's so much information out there, I really want to cut through the noise and give you distilled down information so that you can make intelligent decisions. So thank you guys for watching. I really appreciate your subscribers. I really appreciate your comments. Many of you reach out to me through WhatsApp and link below asking to work together. I'm happy to see how we can do that with you and your family. My background is private equity and investments for the last 10, 15 years. I don't come from a sales background. Maybe you can get that from my videos. My job is not to sell something to you, but to rather educate you and hopefully make you more intelligent investors who also want to connect to this region, because it does offer a lot of opportunities for quality of life, for families, for generating wealth. And that's why I'm a proponent of this region. It's why I live here myself, why I have my own business here. And I love connecting investors to this region so they can become more affluent and just have a higher quality of life. So once again, thank you guys for watching. You can reach out to me through the link below if you'd like to chat with me about potential deals together. My name is Alex, and I will see you next time.